I got to tell you, I'd much rather own Bitcoin than little itty-bitty exploration companies. It's
or treasuries.
Gosh, darn. But yeah, it's interesting, Kerry. It looked, we're recording this on Monday, the 22nd. If you just go back to last Tuesday, the whatever that is, 16th, man, it looked great. We looked like we were ready to rock and roll. In hindsight now, we can look back and see why we've been under such pressure for the last 3 or 4 days.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz, and our good friend Craig Hemke is with us, and you find him at tfmetalsreport.com. Craig, the metals are going down right now. We thought we were at the promised land, but other good news, Bitcoin's going up.
How about that? Hey, you know what? You got to have some zig and some zag in your portfolio. A lot of people assume that I must hate Bitcoin or something because I've been a gold enthusiast now for 15 years. But now I own both. Why wouldn't you own both? And so, that's been nice to see. It looked a little shaky, a week or two ago, and it got down to 55,000 or so.
Right, 54. Yeah.
I got to tell you, I'd much rather own Bitcoin than little itty-bitty exploration companies. It's
or treasuries.
Gosh, darn. But yeah, it's interesting, Kerry. It looked, we're recording this on Monday, the 22nd. If you just go back to last Tuesday, the whatever that is, 16th, man, it looked great. We looked like we were ready to rock and roll. In hindsight now, we can look back and see why we've been under such pressure for the last 3 or 4 days. And again, I don't, this is not surprising. Both metals are in kind of a trading range and have been for either 60 or 90 days, depending on, which one you're looking at. I think we're set up, though, after we get through this week and probably next, or at least the first part of next week, we're set up for a very strong seasonal time, August. Seasonally, if you average out all the Augusts over the last 25 years, August on average is the second best month of the year after January. So we're probably just a little bit of a washout, getting some of the speculative money out of gold and silver before we get the next leg higher.
So we're going to blow through 2,500, obviously. Where's it going to stop? We're going to hit 3,000 and then a pause?
I don't think we'll make it that far. That's the hard part. You look at silver and you can, if you're trying to use a price chart to figure out, where the next resistance is, you look at silver and you go, oh, well, this is pretty clear. And we talked about this. Remember, you had to get through 26, then you had to get through 28. And then once you got through 28, you're going to go above 30. And now we can see 34, 36, right? Because those are the lows back in 2011 and 2012. But gold's never been here before.
Yeah.
So how do you try to project? Yeah. So, there are people that do Fibonacci, extensions and stuff like that.
Can't even pronounce it, let alone figure out how it works.
Right. Let's just say this. Gold will, and silver too, will continue to move higher in stages in a bull market the way they always have, as long as the derivatives market is allowed to set the price. And that's the discovery method that we have, then bull markets are going to unroll the way they always have, which is kind of 2 steps forward, 1 step back. You get this big rush of excitement and speculative money comes in and the hedge funds get long and the banks get short. And then you run out of momentum and you run out of buyers and price tips over and breaks the moving average. And then the spec money floods out and the banks cover their shorts. And then you reach a bottom and then you go back and think of it as like a series of higher highs and higher lows that you see in just about anything. That's why I don't think 3,000 is the next target. It's probably more like once you have a clear breakout, there'll be another rush of enthusiasm, probably 2,650-ish, 2,600, something like that.
Yeah.
And then,
okay. Well, 2,500 is within earshot, right?
Oh, last week it was within. Yeah, we were looking at it last week at this time. So, yeah, Yeah. And what's nice, Kerry, is when you get into long trading ranges like this, it can work both ways. When you're breaking down and price keeps bouncing off the support, then everybody starts watching it and goes, oh, crap, if we break down through that level, I got to get out. You got all these sell stops in there. It works the other way, though, too. When you break out of a range, and gold's now been in this range for really 90 days, been up to 2450, 2470, 83 times now. The same thing is true. Everybody, it's a clear breakout. Okay, now there's and so that the longer you stay in a range, the more likely that you're going to have, a pretty good pop. Again, look back at gold on the, from 2020, middle of 2020 to the first part of this year, gold kept banging up against 2000, right? In this long, drawn out range. And once it finally blasted through, it went up $100 the next week and then another $200 in the next 5 weeks because everybody saw it. And that's what we'll wait for as we get into August and September, that kind of breakout again.
All right. So what about silver? That's been come back to around the 30-ish range here.
And even lower. Yeah.
Just under.
Silver is back to kind of what, do you remember, well, like I just mentioned, gold broke out in March the 1st, if it was a Friday. It tried to break out December 1st and then the chart got painted. Remember, it's on a Sunday night, December the 3rd, I was at Lambeau Field to watch the Chiefs and the Packers. It popped like $60 and 15 minutes into the session, then they hammered it down $120. And now the chart's painted, everybody hates it. And they bought themselves, they being the banks that, monopolistically control that market, they bought themselves 90 days to kind of get their books right. And then on Friday, March the 1st, 90 days later, gold breaks out on the weekly chart, closed like 2067 or 2075, something like that, on a clear breakout, and then rallied $100 the next. All right, so rallies through March, and everyone's like, well, why the hell isn't silver going anywhere? The same thing like now. And again, I think the reason is the same. It's because silver's kind of caught in the middle. You and I think of it as a monetary metal and an investment, but most of the world thinks of it as an industrial metal. So it's this combination. So think if you've got on one side of a barbell, you've got gold as a monetary metal, and you've got copper as an industrial metal, and silver's kind of in between. And if both gold and copper are going up, silver's going to go up. But if gold goes up and copper goes down, silver just kind of stays in between. Does that make sense?
Yeah.
And that's what's happening. Copper just blew higher in April and May and dragged silver along with it. Copper got to over 11,000 a ton in London. It got to $5.17 a pound in New York in the middle of May. And now 2 months later, it's $4.17 a pound. That's 20% decline. If silver were to fall 20% from its highs, we'd be talking 26, 27. So silver, again, it's just kind of like, I think that, it's kind of a brute force and a metaphor analogy, but it's kind of one got up, the other got down. So it's just kind of rotating in the middle. So if copper to turn again and gold to go, then silver will break out too.
Interesting that copper is staying above $4 though, just like.
Yeah, boy, what a dog. It has just been, and again, for silver investors, this will sound familiar. Go back to 2011. Remember, silver was soaring, and then it got crushed on that May Day massacre of May 2011. And then the CME raised margins 5 times in 9 days. And so everybody that had bought in the 40s, all of a sudden they were underwater and they got margin calls, and they all dumped and price fell into the low 30s. Well, they did the same thing to freaking copper in May. They raised margins 4 times in 7 days. And so everybody that thought, there's a short squeeze, there's, dwindling global stockpiles and all this kind of stuff, everybody that got in from 450 and 470 and 490, all of a sudden they raise margins and then price collapses and they all get flushed back out. It's just the same crap.
And they do it every time, right? Is there going to be a time when they raise margins and it doesn't respond?
Remember the tamp from the silver squeeze? It's like, whose side are you on? Well, we're on the side of the bullion banks and the precious metals and Trafigura and the other, the big copper dealers in the copper market. We can't have them getting squeezed. Remember, there were back in the middle of May, there was all these like Bloomberg stories about how they were record short and they were going to float in some copper concentrate, on tankers to try to. Remember those stories? So instead, they smashed the futures price and all this. Oh, wait a second, we guess we don't have to worry about that kind of stuff.
Problem solved.
Problem solved.
Yeah, crazy. So you think this little lull that's coming up is a good buying opportunity, Craig?
Yes. Like I said, from a seasonality standpoint, right? Again, really late July through August and about the first half of September is almost as strong as late December and January. So again, that doesn't mean it goes up every August, but chances are it's August. And then you look at, kind of the economic fundamental picture of a slowing economy. All of a sudden, everybody's thinking at least 2 rate cuts. We're going to get the FOMC meeting next week that maybe Powell's going to be hinting at what's to come, right? And then by later next week, we get the next jobs report, and all of a sudden, that jobs report from July gets, revised down like almost every other job report.
Over there.
Right. So the fundamental picture starts to kind of flip in our favor, I think, in August as well. But in the meantime, first, again, 2 steps forward, 1 step back. Let me lay a stat on you, Kerry. And I don't know numbers. If I could flash this on the screen, it'd be easier for people to follow. I want people to kind of see if they can follow this. We get, with all commodities, the CFTC, the Commodity Futures Trading Commission, puts out a report every Friday called the Commitment of Traders. Right. And it's not just gold and silver. I mean, it's everything. What makes gold and silver unique is there's always these banks that are always short. They're never long. They're always short. Sometimes they're long S&P futures and bond futures and Forex futures. And hit my microphone. They hit everything else.
Yeah.
But they're never long. Right. So anyway, so we can track, if you follow these things historically, which I do, I've got a stack of over 10 years worth of these things handwritten on my desk to my right. That's this big stack of paper back here.
Yeah.
Then you can look for historical trends. Okay. And then you can go back and look at price and go, well, what happened the last time the structure within this report was like this? Okay, you with me so far?
Yeah, I'm following.
Last Tuesday, when gold was right on the verge of breaking out, and we're all excited. I was excited. Heck, I bought a call on COMEX Silver that day. That's how excited I was. There was a Commitment of Traders survey at the close when all these positions get reported. Now, the CFTC, of course, they don't release that information the next day. No, of course not. 3 days later, and after the close on Friday, 74 hours later, they give you this information. Had we had this information on Wednesday, it might have impacted how people were trading. So what was the information on Friday? Let me lay these on you. Within these categories, you have what they call large speculators, which are like hedge funds, right? Family offices and the like. And then there are commercials, which are like mining companies that still hedge, or these bullion banks. Okay, Here we go. As of last Tuesday, we got all these positions. The last time the large speculator category was net long, they got about their gross long and gross short, the net number. The last time that net long number of contracts was this high, price fell $134 in the next week. It's better. Well, it gets worse. The last time the gross long, the amount of just straight up contracts that the speculator category is long, COMEX Gold, price fell $117 the next week. The next 5 days after that COT survey. The last time the commercials, the banks, were net short this many COMEX contracts as they were last Tuesday, price fell $122 the next week. All right, well, that survey was last Tuesday. We've had 3 market days, and now as we record this, we're on day 4 before the next survey on Tuesday. Gold's down about $85 so far. See a pattern here, check.
It sounds like a coincidence to me.
Yeah, it has to be. Wouldn't it have been handy knowing this history for like the people on my site if I could have gotten on Wednesday and said, oh, crap, this Commitment of Traders and known all this information, but I didn't know this information till Friday at 3:30 Eastern. Then I got to go through all these sheets back here to dig all that data out of there.
You need an intern to put all this data on the computer.
Yeah, really. Good point. There are some things that are sacrosanct and I got to have that. But the moral of the story is getting all this back to what we've been talking about for people that are still with us. We are now in a week where this week in particular, the economic data is going to be funky. We got the next PCE report coming on Friday. So we've got to navigate our way through the inflation data. But on Thursday, all the options for the August contract in COMEX gold get priced. With all this bullishness, there's a lot more calls than there are puts. So there's reason to kind of rig it down. Then you've got, I mentioned all these speculators, hedge funds and the like that are long COMEX gold. Well, most of them have been long the front month, the August contract. So they're going to have to liquidate because they're not standing for delivery.
No.
So they got to sell those. Okay, so that's natural selling pressure. Now, if you take 100 August contracts and sell them, but then immediately turn around and buy 100 December contracts long, well, the net pressure is nothing. But when price is going down, maybe you wait, Kerry. You go, well, I still want to be long gold, but I think it's going to go down here in the short term. So I'm going to sell my 100, but I'm only going to buy back 50 in December. Well, that's 50 contracts in net selling pressure. You get enough of these large spec liquidations, and it's just a natural. So you got option expiration coming up. You've got that contract going off the board. That's a lot of just natural selling pressure that we're going to have to deal with over the next 6 or 7 trading days. So I'm just kind of expecting kind of a short-term low by then, and then we'll see what happens in August.
I can see it. Makes total sense here. But like you say, they haven't been able to turn back the seasonality, right?
Right. Yeah. Again, it doesn't mean just like we don't go up in every January. Doesn't mean price has to go higher in August. Mm-hmm. Typically, though, it's like people talk, the stock market goes down in October, or sell in May and go away, that kind of stuff for the stock market. It's just, that's what they're talking about is seasonality. So typically, and then if you combine that with like what I said, what if the jobs report on the first Friday after we just get through the FOMC is weaker than expected finally, and the unemployment rate ticks up again to 4.3 above.
Disappointed. Expert disappointed by latest jobs report.
Right. What if you get that kind of stuff? And then everybody would be waiting for Powell at the Jackson Hole Symposium, coming up in late August. And then he'll be setting the table for rate cuts, as soon as the September. So that the narrative could potentially shift, and that might be enough. I mean, gold's already been anticipating all of this since March, but once it finally begins to happen, that might be enough to kick us out to the upside.
Hey, what about rate cuts here? We've been expecting. They got to do it now, right?
You would think. I would normally say absolutely. And the Fed funds futures and all those projections are now saying for sure 2, maybe 3 cuts in Fed funds before the end of the year. Back at the end of last year, it was obvious to me, and I wrote about it in my annual forecast in January, when they were saying 7 or 8 rate cuts this year. I thought there was no way that was going to happen. And it, and obviously it didn't. Gold survived that and actually rallied, which is remarkable. I'm a little skeptical. There's getting to be too many people on that side of the boat again. That's why I'm a little cautious as we get later into this week, like about this PCE inflation data. If it comes in as slightly hotter than expected, everybody's going to go, oh, no, maybe it's only going to be 1 rate cut this year, and we're playing all those games again. However, once they get started and it becomes obvious that not only do they have to cut rates, but we got to get into, in time, something like yield curve control, just simply so that we can fund the ongoing deficits, the debt, and the interest on the national debt. As that all plays out, I mean, it's so fundamentally positive for gold and silver. But again, maybe the next week or 10 days, we're just going to have to battle it a little bit.
All right. Definitely interesting times here, Craig. So for this, you take a longer view and you just buy physical then, right?
Yeah, that's what we talk about at my website all the time. There are cases, we talk about the mining shares because a lot of people own them. I own them too. People that are members of my site can see the ones that I own, and then they know which ones to stay away from. But yeah, in the end, it's that physical metal that's has always been your kind of lifeboat, through the tempest to get you into safe harbor eventually. And there's just, the math is the math, man. I mean, $35 trillion debt now. We're paying over $1 trillion a year just to service that.
Yeah.
We get into a recession and tax receipts fall while spending increases, and we're going to be consistently running $2 trillion or more every year. I mean, and it's not like people should say, oh, that Trump, he's going to come in and he doesn't have a track record of being a deficit hawk. So I wouldn't necessarily, look for some big change, even if Trump is elected. I mean, the math is the math, and this is all why, again. The best thing I've always, advised people to do is look at owning physical, and you don't take all of your cash out of the bank and go buy gold and bury it in the backyard. Wouldn't do that with anything. But as a hedge against all of this, as an insurance policy against all this, as again, that lifeboat in the storm, that's what the physical metals are for.
Yeah, that's it. Exactly. The insurance policy, the ultimate insurance policy. And all right. Well, hey, as always, great talking to you, catching up and getting your latest take on things. Sounds like as usual, you got a pretty good handle on it. And I encourage all of you to go over to tfmetalsreport.com, subscribe, and get Craig's latest take on what's unfolding in the markets here. It's been very canny over the years. I mean, I remember like 3 years ago talking about this, and boom, like clockwork, Craig. So, hey, if you got a question for Craig or myself, shoot me an email, kl@kerrylutz.com. Make sure you subscribe to tfmetalsreport.com. You get a free weekly newsletter, and hey, if you pay a little more than an inflated cost of a latte per day, you get to be on the forum there.
Yep, and a post every morning to kind of summarize the news of the day, and then a podcast every afternoon to summarize the news of the day. So we'll keep you in front as best we can of what's coming.
All right, cool. All right, hey, and you find a link to Craig's site on the show notes to this interview on financialsurvivalnetwork.com. Just click it, take you right through. While you're there, sign up for your free newsletter. Craig, always a pleasure. We'll talk to you again real soon.
I always look forward to it, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.